Welcome to your October 14th market outlook. Today, we're diving deep into gold, silver, the euro, the pound, and the Nasdaq. We'll be looking at how price is moving around key fair value gaps, daily imbalances, and liquidity sweeps to get a clear picture of what's next. Let's get right into the charts. First up, gold. Now let's look at silver. It saw a sharp rejection after tapping into the daily premium zone at 52.2, which happened right after a strong liquidity sweep above the previous highs. The market is now retracing into a 4-hour bullish fair value gap around 50.8. This area is critical. It could be a great re-entry spot for another leg up, but if that support doesn't hold, we might see a retest of the weekly bullish fair value gap down near 49.8. Moving over to currencies, the euro is still looking bearish. Price was rejected from the 4-hour bearish fair value gap and has since picked up downward momentum. The current structure confirms that sellers are firmly in control. The immediate target is 1.153, with the next major daily demand zone sitting at 1.15. We would need to see a daily close above 1.161 to even begin neutralizing this bearish move. Similarly, the pound took a dive after retesting its own 4-hour bearish fair value gap. This rejection confirms there's a heavy supply of sellers around the 1.334 level. As long as the price stays below this zone, the path of least resistance is down. We're looking at 1.326 and possibly even 1.322. As the next downside objectives, any small bounces into equilibrium levels could present new opportunities to get short, in line with the overall daily bearish trend. Finally, let's check on the Nasdaq. It continues to respect the 4-hour bearish fair value gap. So to wrap it all up, gold and silver are pulling back after some strong bullish runs, while the euro and pound continue their bearish delivery. The Nasdaq also remains weak below its key 4-hour fair value gap. Keep a close eye on retracements into these imbalance zones to fine-tune your entries, and as always, let the market show its hand before you put any capital at risk. Thanks for tuning in today. If you found this breakdown helpful, be sure to hit that like button, subscribe to the channel, and ring the bell so you don't miss our next update. See you in the next one.